Right, so finally we have something that I can talk about for the futures indices. Okay, now let's take a look at the charts from the higher time frames. Now as you can see right here, what I'm anchoring the fibs to is basically the low of the year to the yearly open, similar to NQ right here. And we are right now within 4 to 4.5 for S&P 500 and 2 to 2.5 for Nasdaq. So these levels are predominantly used for retracements and reversals, which means price usually retraces or reverses from these levels. So what I will be trying to do is to see where price is most probably going to attack for the rest of April. Okay, and probably for the rest of the quarter if possible. So right now, having these levels in mind, I'm going to switch to a different chart whereby I don't have so many annotations, and we're going to start clean. So we'll be starting everything clean here, and I'm going to start off with the chart for NQ, right? So similarly, the opening prices are always very important, so I'm going to mark out the yearly open. I am going to mark out the April's open. Okay, and I'm also going to mark out the nearest PD rate available for the 3-month candle. Right. So right now we have these 3 levels here. I'm gonna compare NQ with ES. Right. So what's the difference right here for NQ versus ES? Right, so same, we're going to have the yearly open right here and April's open right up there. Just from this, you can clearly see that we have SMT on the highs. So S&P 500 took out the previous quarter's high, whereas NQ failed to do so. Whenever there is an SMT, I'll be looking for a shift in the current order flow. So because right now the current order flow is bullish, this SMT provides a possibility that price is going to trade in opposite direction. Furthermore, we are at the start of the new quarterly candle as well, right? And from the previous chart, you can see that we are reaching, price has reached into a reversal / retracement level. So it is very reasonable to anticipate retracements / reversals. With these levels, I'll be going down into the lower time frames step by step, and then I'm going to see if there is any key levels that I can utilize for next week's trade, or next week's buyers, or or maybe establish a bias for the next few weeks. Right, so on the monthly chart, we do have this fair value gap down here, which is the previous month's low. I'm going to highlight that. This is for NQ, right? So previous month low. And for short-term objectives, I think we are probably going to attack this area here by the end of the month. Okay, because if we don't do that, we're most probably going to print an inside candle, which is not optimal if you're looking for a trade, right? But it gives us, obviously it's going to give us a clearer picture of what's going to happen for the next 2 months, but I will be leaning on to the bias that we are going to attack the previous month's low. Moving down into the weekly time frame, we can see that right here we have relative equal lows, right, on the lower time frames. This week here, the candle for this week did not take out the candle for this week's low, so I am going to refine my draw on liquidity to this week's low, to this candle's low. Make sense here? Because NQ is the weaker asset in terms of the current SMT/order flow, right? Because it has failed to take out the previous quarter's high as compared to S&P 500. So I would prefer to short NQ for now. That's the analysis, right? It may change when we move on to S&P 500. What can we see from the daily chart, right? So for the daily chart, right here we have the equal lows are right now are more obvious. So we have equal lows on the daily chart, and right here you can see the April's open and this draw on liquidity. So let's just say prior to this shift we are bullish. What levels would we use to engage the price for longs, for example? Obviously we would use this bullish fair value gap, and you notice how price is unwilling to respect this bullish fair value gap for the past few weeks. So this downwards trend here is a clear order flow or a clear indication that we are most probably going to go lower. Okay, the thing about the previous week, right, the second week of April, predominantly the CPI week, price action wasn't really that clean. Okay, as you can see, this back and forth. So on the higher time frames, I mean, it looks like we are in a range. So with regards to this range, we are between the previous month's range, right? So the month of March, you have the monthly low here. Okay, I'm gonna anchor it here for this current dealing range. The monthly candles low and the monthly candles high. So I'm going to annotate this as well. March high, March low. So right now we basically just have to focus within this dealing range. Where is price going? I mean, where is price most likely is going for, right? Is it the highs or is it the lows? For me, it looks like we're going to attack the lows due to the current SMT that is present in S&P 500. And on the daily time frames, bullish PD arrays are not respected. Therefore, I am leaning bearish. So with this in mind, heading to next week, I'll be looking for shorts into the March low. Okay, so how would I look for the short? Heading down into the 6-hour time frame, I will be looking for, in general, I will be looking for a clear market structure that I can rely on and that I can trust, right? So as you can see right here, the way that it traded lower from this time here to this time, it wasn't really that clean. Price action wasn't very clear as to what its intentions are, leaving equal highs and equal lows. So in this case here, it's pretty hard. I mean, from this time frame to this time frame here, it's pretty hard to really gauge, where the price is trying to attack. But as of the end of this week's closing, I believe that we have a clear indication here. That's something that we can trust. So if you take a look at these highs here, okay, we have the 3 drives higher pattern, and these 3 drives did not invalidate this old high right here. So to me, this is a clear indication that we are going lower. At the same time, the last point of, the last high that produced this leg down lower was at April's opening price. So when I see an opening price support the idea, right? So let's just say, for example, if you're bearish, you want to see April's open act as resistance. If you're bullish, you want to see April's open act as support. So right now, it clearly shows that it is acting as resistance, because for many times we have tried to close above or trade above, it wasn't allowing that. Right? It wasn't allowing the price to do so. Therefore, the bias for now, it's obvious that we are bearish. So with that in mind, I will be looking for a lower time frame entry that would make sense. So from this high here, I understand that this high is most likely going to be kept intact until objectives are met. And in a case whereby price comes back and validates this high, then obviously we are in a seek and destroy condition, which means very tough trading conditions. Okay, now let's take a look at this leg down. If we have anything that we can key off from to go short into March low. So heading down into the lower time frames, 4 hours, do we have anything right here that I can utilize? Right, so far my eyes jumps into this level so far. Okay, this is what I see, and maybe this one, it's not too clear, but this was the last fair value gap that sent the price higher. So right here, and then we have CBs above, heading down into the lower time frames on the 1 hour. We have this BPR, inversion fair value gap. Alright, so I'm going to use this inversion fair value gap, right? Now the reason is because, so I'm going to remove this. The reason is because we have back and forth price action right here, and there are no fair value gaps here, right? So this area, it's pretty much balanced. If price is to be bullish, I mean if price is to be bearish, in my personal opinion, price should not close above this inversion fair value gap here. Okay, so why is that so? Because this inversion should act as a resistance for lower prices, especially when we are that close to the liquidity below. And maybe, just maybe, due to the events that have happened during the weekends, we might just open the market gapping lower. So we might not even have a chance to enter a short position, right? And then from there, we need to re-evaluate again. So this forecasting thing is basically just a framework, just a draft, right? And it's also a practice because you can utilize the same framework for your daily analysis for your intraday trading. Okay, so for me, I'm anticipating price to just drop from this level into March low by the end of next week, and then we'll see what happens. Right, maybe we might not get a trade, maybe we might get a trade. There is a high impact news on Monday, and then after that, the next high impact news would be Thursday. Therefore, my main focus would be on Tuesday and Wednesday. If Monday gives a sell-off, I'm thinking that Tuesday is the continuation of Monday. Okay, it's very clear. Right, let me just double check the Forex Factory for a while. Let's see if the information are correct. Right, so apparently they have slotted in Jerome Powell speaking. Jerome Powell speeches at 1:15 p.m. on Tuesday, so I'm gonna note that down. And in such a case, I would try to trade on Monday and I'll avoid Tuesday. So Monday, my trading schedule for next week would be Monday, Wednesday, Thursday, skipping Tuesday. Okay, and then I would be expecting Monday and Tuesday to provide maybe like a manipulation for the week, right? So that's my anticipation, because we have Jerome Powell speaking on Tuesday, so that to me is low probability. Right, so back into the charts. This would be my bias for NQ next week. Now that's all for next week. I don't really have any much for NQ, right? Because the structure, it clearly shows that we are in accumulation, and Usually you would want to wait until one side of the range is purged before looking or before analyzing if this is going to be a breakout or is this just a turtle soup, right? Because on a higher time frames, keep in mind that we are still bullish. Now let's head over to ES. I think ES has a clearer market structure, so to speak. Now we have trade on a weekly time frame. Sorry, let's start off the monthly. So we have this previous month's low right here. March low and March high. Let's head over to the weekly chart. So how can you trust or validate if the SMT is valid or high probability? Is when you have an SMT with the true open. So April is actually the true open of the yearly candle, right? So to me, this SMT here is a very high probability SMT. And whenever there is an SMT, you're pretty much going to anticipate reversals rather than retracements. So let's see if that happens. Okay, now for ES, we have reached into this weekly fair value gap right here, but if you look closely, we have this weekly volume imbalance right here. This area here, to me, it's like the low-hanging fruit for next week, right? So weekly volume imbalance, and below that it's March low. Okay, so from here we're going to jump into the daily. Right, so ES, it's clearer than NQ, right? On daily chart we have this fair value gap here. It was utilized to send the price higher, and once we got a closing below this fair value gap, this right now is inversion. So as you can see, the price after this down close candle, the price is respecting the consequent encroachment here of this inversion. Okay, so to me, ES has a better price action as compared to NQ. Okay, so the weekly volume imbalance is right here. We still have quite a lot of inefficiencies that can be tapped into from this low. So I believe this is next low hanging fruit, and we'll see if it wants to attack March low. It looks like it can attack March low. Okay, now if you take a look at the 6 hours, it's actually very nice here. Or not the 6 hours, the 4 hours, sorry. So what happened basically in the first 2 weeks of April, right? April, we opened up, took out previous month's high, or you can say the previous quarter's high, shifted the market structure right here at this very down close candle, and then it just trades off lower, taking out the low that made this high here. And then on Thursday, price actually came back up all the way to take out this swing high here into this premium fair value gap, right? So if you take the fit, you measure from swing high to swing low. Above 50%, you have a swing high, and then you have a fair value gap that is within the OTE, and then it just sells off. When it sells off, it left relative equal lows down here. So basically it's telling you it's not done. Right, so for the following week right here, right around here we have the new week opening price here from this candle onwards. Okay, so this is Sunday 6 o'clock, right? Price was trading in seek and destroy profile because we have a CPI on Wednesday. So this candle right here is on Wednesday. CPI came back all the way into this last up close candle that took out this swing high here. Right here, as you can see, this is the opening price of this order block, right? So we run out the equal highs here, relatively equal highs here, into a higher time frame PD array, right? Basically this order block here, and then smashes lower, taking out the relative equal lows down here. All right, and that was one of the higher probability trades that you could have taken if not for CPI, right? So moving forward, price basically just trades back into this fair value gap, and then more precisely into this old daily version fair value gap, and then trades lower again, because right down here at this low it's leaving equal lows as well. So basically it's telling you it's not done, right? And we close the week with this low right here. So the nearest P array to this low would be this fair value gap here, which is why I think that we are most probably going to trade into this fair value gap next week, right? So what can you see from the first 2 weeks, right? To me, it's basically a high resistance liquidity runs, right? You have stop hunts, right? You have to weather through deep retracements, and then it just runs into the target but not hitting the target, and then runs up back again, deep retracements, and then runs into the target here, but then leaving an old low here, right? And then just retrace back very deep, right? As you can see, this is within the premium of this CB here, right? It's above the consequent encroachment here, and then drops off again. So to me, this is high resistance liquidity runs on the higher time frames, which makes the last 2 weeks very hard to trade, right? So because we're heading into Q3, I will be anticipating a much easier price action. Okay, now what levels can I utilize for this objective here, right? To me, the clearest would be this swing high here, I mean this swing low, coupled with this fair value gap. So in my opinion, price should not trade above this fair value gap. Right, if you take a look at the 1 hour time frame, it can trade up into this breaker here, and from this breaker I really want to see price trade lower because we're really close to the objective, right? And I'm assuming we are most probably going to gap down on Monday. If we don't gap down on Monday, that would be great, because that means that we will have a trade available in the early part of the week, in the first half of the week, right? And then we might get a second trade at the second half of the week, right? But if all else, I mean, if it just gaps down from Monday, then obviously we will only have the second half of the week for the potential trade entry. All right, so I'm expecting this level to hold, this 4 hour wick as well as the 4 hour CB to hold, right? So if price wants to trade back up into this level here and then drops, this would be my normal expectation of price action. Barring any gap downs, obviously. right? And with this, let's see if we can trade into March low eventually by the end of April. Okay, so that is what I'm anticipating, and that is what I am watching as well. And on the higher time frames, I'm really looking at the quarterly fair value gap right down here if it doesn't form one right here. All right, so for this current quarter we have April, May and June, so we might find some bottom by the end of May, and then June would be like sort of a consolidation. Not too sure how this is going to work out, but yeah, let's see how fast it drops, right? So that's the whole idea of Q2. Because Q1 is a expansion, I'm expecting Q2 to be consolidation for this year's profile, unless of course something changes that we take out Q1's low. So let's just say we take out Q1's low at the, with this candle here. Alright, so this candle basically just trades all the way down into this fair value gap. What would that mean? Okay, for me that is two things. One, we could be in a seek and destroy profile. Q2 taking out Q1's highs and lows, and then Q3 we're going to take out Q2's highs and lows. Very simple. That would be seek and destroy profile. Second thing would be reversals. Right, because personally I'm thinking that if we are really going to go higher, price should not take out Q1's low. That's just my opinion, right? But if you take a look at NQ, it makes a lot of sense to trade down into this fair value gap for an entry to higher prices, right? It makes a lot of sense to do so. But then again, we'll have to depend on, we'll have to watch where the dollar is trading. So we can't have the bullish dollar and expect indices to rally, right? Because right now the dollar is bullish. So it all depends how far is the dollar going to expand to the upside. If the dollar just keeps expanding, then it's very hard for me to expect indices to keep running higher with the dollar. Am I making sense here? Right, so all these things considered, when price, if price ever reach down into this level, I'll have to really watch closely to see if this is indeed reversals towards the downside or not. But I don't think it is, honestly speaking, because we don't have a higher time frame SMT. What do I mean by that? When you take a look at NQ and ES during the COVID year, for example, this is what I call a higher time frame SMT right here. And for even in 2016 we have one as well, this swing low here as compared to this low, right? Because it's not very clear here, I'm gonna mark it out for you. Higher highs on NQ, lower lows, higher lows on NQ, lower lows on ES. And then for the COVID, obviously you can see right here, higher lows for NQ, lower lows for ES. So this to me is a higher time frame SMT. But because right now we don't have that, right? If you're comparing it right here, we are making higher highs. So I'm not anticipating reversals or mega crashes just yet. If ever price trades into this fair value gap, for me it's a long. It's an opportunity to go long with my invalidation right here, this swing low here. It's pretty obvious, okay? Now if it comes down, right, for example, if it comes down and trades back up, and then we have a SMT above this highs here, then I would consider probably we are going to crash. Okay, that's how I that's my opinion on the markets, right? So if we were to look for something like maybe an example of a crash, right, we have it here. From this high, okay, from this high, basically, hold on a second, this is the 2008 crash, okay, after the 2000 crash, right? But if you take a look at the overall picture, it's basically accumulation, right? So let me just mark it out. So this high here is basically this high, okay? Nasdaq did not make higher highs. ES made a higher high. So this to me is a higher time frame SMT of top. Okay, so it must be very clear, and it must not be consecutive candles high, right? It can be, right, like something like this right here. Sorry, right here, this high and this high, as compared to this high and this high. So as you can see right here, we have lower highs for NQ, higher highs for S&P, right? This could also mean that it's SMT, but it's harder to see, right? So right now, maybe it could be that this is the example that we're having right now, happening right now in real life, in real time, sorry, right? This could induce a crash, okay? The current SMT that we are seeing right now, right? Just the previous quarter SMT, maybe it's more than enough, I'm not too sure, but based on the current order flow, I don't think that's the case, right? Because for this example right here, we don't really have anything to gauge off from. Like, let's say if we're going to run higher, what levels would price be, like, let's say like a long entry, for example, right? So the nearest long entry I can find here is this inversion fair value gap, right? So basically this level here, 50% of this discount wick right here, right? So you want to enter here, and you want to long here, basically looking for higher highs, but eventually trade it through, closing below this candle here, and then that's when it starts off this huge run lower. So in any case, if we are going to be presented with this type of SMT this year, okay, don't be afraid of missing the move, right? Because for example, right now, if we take out this swing low here, right, we are definitely going to attack COVID's low. Why? Because of Nasdaq. Okay, this year's low, it has this fair value gap right here. there's a huge run from this level, for example, to this level here. So technically you're not missing anything. For ES, we could attack this breaker here, or this order block, right? It was never reached, right down here, okay? This could be a target as well for ES. So if it breaks this low and then it retreats a little bit and then goes lower, we're not missing anything. That's like a 800 handles here for ES, and for NQ, maybe from this low to here, that's like 4,000 handles. So I mean, don't be afraid of missing the huge move if it was to happen that way, right? As you can see, this candle's SMT, right? It could happen that way, right? But for that to happen, we first have to take out this low. Okay, that's just my opinion, right? Now, with that said, we're pretty much done with this session. I hope you find this insightful, right? Because I didn't want to do a weekly forecast anymore. It's because that I don't think there's always something to talk about every week, right? So for example, like this past few weeks right here, we were just in a consolidation, so to be honest, I don't really have anything that I can glean from, right? All I was waiting for was a clear market structure and a clear objective. So since that right now it has presented that clarity, there is something for me to share, right? And I don't want to bind myself to doing weekly forecast when there is nothing to share, right? I find it quite meaningless. So yeah, this is the current state of things in terms of the marketplace, and I hope you enjoyed it. One more thing I want to add is, if we are bullish, we should not stay below April's opening price for very long. Okay, let me remove all the indicators so they can, all the annotations so they can see. If price is bullish, we should not stay below April's opening price for very long. For example, let me show you. This is the month. Let's look at the year 2023. April 2023, April. Right, as you can see this very beautiful touch here. Okay, same thing if it is going to be bearish. Okay, oops. Right, as you can see, it did not spend a lot of time above April's opening price when it's bearish, vice versa when it's bullish, right? More examples. April here. April right here. It did not even have a April's week. Okay. What else? 2020, March, April. So can you see the signature here? Right here. Sorry, did I miss a year? Yeah, I did miss a year. April. Sorry, right here. April. Right, and down here would be, this is year 2019, 2018. April 2018, April. Right, so as you can see, right, I'm just going to go all up till 2016. Okay, you can just look through the other, you can just backtest it yourself. April, and right here you have the April opening here, and the April's opening here. Right, so from here you can clearly see that whenever the year is going to be bullish, price is not going to hang around April's opening for very long. So for this year, particular year, we have excluding the month of April, okay, including the month of April, 1, 2, 3, 4 months, and then rally. Same here, 1, 2, 3, 4, comes back down the last few months and then rally. right? The time spent down here below April's open is very little. Right here as well, 1, 2 rally. For Nasdaq it's just 1 month and then rally. Right here as well, 1, 2 and rally, but obviously eventually we came back down because we took out a all-time highs. And then right here, 1, 2, 3, 4, right? Took out all-time highs again, equal highs, and then came back down again. And then for this year, this basically is the only month 1 and then rally. Right here we didn't even have the opportunity to enter long right here. So for S&P, right, for Nasdaq you have a opportunity right here. So 1, 2 rally, 1 rally. So when it's bearish, first 1 month and then crash. Same for S&P, 1 month crash. April being the only month above April's opening price. Okay, and then right here as well, 1, 2, 3 months, but this last month is considered like a turtle soup for me, right? So 1, 2, 3 rally, did not really stay below here. It's all wicks. Okay, right here as well for NQ it's more bullish. So 1, 2, right here it's basically wicks. This is the wicks, W-I-C-K. Okay, now when you have these wicks you would anticipate huge expansions, but when you have body closures you won't be anticipating huge expansions, right? So here, right here as well for the year basically, right? So from this opening to the end of the year, it's basically here. The expansion wasn't really a lot, right? From this year, this expansion was a lot because we only have wicks below. This year we have bodies. No, prior to that we only have wicks, and then after that we closed the year somewhere around here. We closed below. Okay, so this is a problematic right here because we took out all-time highs, I believe, right, as well as here, right? But this thing here, so I think it comes with time as well, that I'll have to dig deeper, but this is the basic concept that I have for you, right? And this April's opening is basically from Traders Day, right? If you're interested to know or learn more about true opens, you can just look up Trader Day, D-A-Y-E, right? He was the one that introduced this concept and I learned it from him, so all the credits are to him, right? And yep, that's it for this sharing and this session here, right? I hope you really enjoyed it, right? Rest well and good luck trading next week.